So why are we optimistic for 2024 and beyond? As I mentioned before, some of those risks that drove markets down back in 2022, which was essentially very high inflation rates as we were coming out of COVID, and then that aggressive rate hike cycle that went from 0 to 5.5% over in the US. All those sort of headwinds are now subsiding. The Feds and throughout this presentation, I just want to note that I'm really referring to what's happening in the US in terms of the US economy, the US inflation and interest rates, and the US market. It's really important to understand that whatever happens in the US is what's going to drive Australian equity markets. So that's where we need to gaze into in order to figure out what's going to happen to Australian equity markets and share prices. So if you look at the US Fed's preferred measure of inflation, the core PCE, that's moved down to 2.75% in April, and that's essentially the lowest since we've had in March 2021. In terms of the Fed funds rate, that's now sitting 2.5% above core PCE, and that's a very restrictive monetary policy, one of the most restrictive that we've seen since September 2007. Now, there's no doubt that inflation is under control and is going to go even lower, and that the rate hike cycle has ended, and now it's just a question of when will the Fed will start cutting. Now, if you look at what the economists are saying over in the US, they're saying that the rate cuts will begin in September, and there's somewhere around 70 or 80% probability that the first rate cut will be in September. Now, historically, if you look at the small cap to mid cap sector in the market, it tends to outperform quite significantly in the 6 to 12 months after the first rate cut. So we expect that part of the market to do really well. On top of that, this year is a US presidential election year. And historically, if you look at the chart on the left-hand side of the page, stocks tend to perform extremely well. Calendar year to date, in fact, the S&P 500 is up 12% as of the end of May, and a little bit higher as we go through June. And in fact, if you look at that chart on the left-hand side, that's actually a 6 months old chart. And we put that up when we did a webinar at the end of last year. We predicted that this year will be a very good year based on the history of presidential election years. And it's playing exactly as we predicted. If you look at that, the last column on the right, we're halfway through that year and the market is tracking to what the historical average has been. So we think it's going to continue into the latter part of this calendar year as we go through the election, and whether Trump or Biden wins, I think it's going to be quite favorable for equity markets.